Hey everyone, welcome back, and if you've been watching the markets lately, you know things have been getting a little rocky in the chip space, but here's the thing, where most people see panic, smart investors see opportunity. So let's talk about something really interesting that the team over at Motley just put out their 3 favorite AI stocks to buy right now, specifically because of this ongoing chip sell-off. And trust me, if you care about where your money is going in 2024 and beyond, you're going to want to stick around for this one. Now first, let's set the scene. The chip sector has been taking some hits lately. We've seen valuation concerns, export restriction fears, and a broader market pullback that's dragged down a lot of semiconductor and AI-adjacent names. For nervous investors, that's a reason to run. But for long-term thinkers? That's essentially a sale sign on some of the most powerful technology companies on the planet. So which stocks are we actually talking about here? The Motley Fool is pointing toward companies that are deeply embedded in the artificial intelligence revolution, names that aren't just riding the AI wave on the surface, but are actually the infrastructure, the picks and shovels, and the software brains that make AI work at scale. Think about it this way. When there's a gold rush, the people who consistently made money weren't always the miners, it was the folks selling the tools. That's the lens you want to apply here. The AI gold rush is real, it's massive, and it's still in its early innings. A temporary sell-off in chips doesn't change the decade-long trajectory of this technology one bit. Now, the stocks being highlighted fall into a really compelling category: companies with strong balance sheets, real revenue growth tied directly to AI infrastructure and deployment, and valuations that, after this sell-off, are looking a lot more attractive than they did just a few months ago. We're talking about businesses where enterprise customers are locking in multi-year contracts, where data center build-outs are accelerating, and where the demand for computing power is only going in one direction: straight up. What makes this moment particularly interesting is the timing. A lot of retail investors got shaken out during this dip, which means institutional money is quietly stepping in and accumulating shares at discounted prices. That's not speculation, that's just how markets work. The smart money tends to move when everyone else is looking away. Now here's something worth thinking about too. The AI chip sell-off isn't necessarily a sign that AI is slowing down. If anything, it might be the opposite. Some of this pressure is coming from the sheer scale of investment happening right now. Companies are spending billions to build out AI capabilities, and that kind of capital deployment can create short-term financial noise even while the long-term story gets stronger. It's counterintuitive, but it's real. The Motley Fool's picks here are focused on companies that can weather that noise, businesses with competitive moats, meaning they have advantages that are really hard for competitors to replicate. Whether that's proprietary chip architecture, dominant cloud AI platforms, or software ecosystems that lock in customers, these are not fly-by-night AI plays. These are foundational companies in what could genuinely be the most transformative technological shift of our lifetime. And look, no investment is without risk. Chip stocks can be volatile, AI valuations can stretch, and macro headwinds are real. But the core question you have to ask yourself is this: do you believe AI is going to be bigger 5 years from now than it is today? If the answer is yes, then a sell-off like this isn't a warning sign. It's an invitation. Make sure you like this video, subscribe if you haven't already, and let me know in the comments, are you buying this dip, or are you waiting for more clarity? See you in the next one.